yes, some of those people, the real people who believe in the concepts of sound money and, they're libertarians and they don't trust government and they're worried about inflation and they were putting their money into Bitcoin, they'll start putting new money into gold, right? They're not going to be able to get any money out of Bitcoin because that's going to disappear. But as far as the new savings that they have that they might otherwise have used to buy additional Bitcoin, that money could be used to buy gold.
I think it's a great positive. When Bitcoin eventually collapses, as it will, because I think it's just a tulip bubble mania, when it collapses, where are those people going to put their money? I think some of that's going to flow to gold.
Cryptocurrencies and gold have both enjoyed impressive years in 2024, with Bitcoin and the precious metal reaching record highs. While these digital and physical assets have shared some common ground this year, their key differences make them valuable tools for balancing portfolios in the year ahead. At first glance, Bitcoin might seem like a competitor to gold since both are alternative assets that can help mitigate risk in a traditional portfolio. However, their unique characteristics, gold's long-standing role as a haven and Bitcoin's high growth potential and volatility, offer complementary benefits for investors to diversify their holdings effectively. PeterSchiff and Adrian Day highlight the challenges gold faces in capturing public attention, noting that Bitcoin seems to be eating gold's lunch in the media spotlight. Despite this, the duo underscores key factors signaling that the gold bull market is only beginning to gain momentum. They point to soaring global debt and deficits, the ongoing debasement of the US dollar, and the eventual collapse of the cryptocurrency market as potent catalysts for gold's resurgence as a premier safe haven asset. Bitcoin's surge to new highs this week has pushed its ratio against gold to record levels, driven by increased institutional interest in the digital asset as the year draws to a close. On Monday, the Bitcoin to gold ratio, measuring how many ounces of gold one Bitcoin can purchase, hit an unprecedented 37.3. This means a single Bitcoin can now buy approximately 37 ounces of gold, marking a historic milestone. While Bitcoin may have temporarily diverted attention and resources from gold, Schiff and Day believe the long-term fundamentals of gold remain strong. They assert that central bank buying, geopolitical uncertainty, and Bitcoin's eventual implosion will support gold's position as a safe haven asset.
Bitcoin is eating gold's lunch in the PR department. It dominates the media coverage. You probably have 10, 20 times, maybe more coverage of Bitcoin than you do of gold. The Bitcoin, they just had their big convention in Nashville. Over 20,000 people spoke or attended the conference, major speakers. Adrian and I just got back from the New Orleans conference, the longest running gold conference in the US, maybe 500 attendees. It's tiny compared to the international interest in Bitcoin. People are making a tremendous amount of money on paper in Bitcoin. Other people are realizing these gains by selling into mania. And I do think that there are some people who are buying Bitcoin instead of gold. I think most people who are buying Bitcoin wouldn't have bought gold. I think they're buying Bitcoin instead of some other meme stock or other speculative assets. So I think that the money that's going out of gold into Bitcoin, as substantial, though I think that's changed a bit this year ever since the ETFs were launched. I think the ETF buyers, I think more of those guys took their money out of gold stocks and gold ETFs than the typical hodler who has self-custody of his own coin. I think some of the investor money was diverted. And I think that's why we had the big outflows from the gold ETFs, and we had the weakness in the gold stocks. I think that was investors moving money out of gold in Bitcoin. That didn't have much effect on gold. Gold had a huge year anyway, and that's because foreign central banks were buying whatever retail investors were selling. Now, it's hard to say, how much higher gold would have been without that selling, or if the retail investor would have been buying in competition with the central banks. We will never know. But I think on the margin, sure, it's taken some of the wind out of gold's sail. But I don't expect that to continue. At some point, the Bitcoin bubble is going to pop for good. And as the air comes out, I think, that'll be a positive for gold.
Yep.
Adrian, your thoughts?
You said exactly what I was going to say, Peter. My sense is, so although the typical Bitcoin buyer and the typical gold buyer have, in some ways, or they certainly have an overlap, if we use the Venn diagram that our vice president likes so much, there's a big overlap in their views about, they're anti-fiat, they're anti-Federal Reserve, little bit anti-government, small government certainly. So in terms of their views and philosophy, there might be an overlap, but I don't think there's a big overlap at all in the personality of the people that buy each asset. In my experience, the typical Bitcoin buyer, and there's many of them on this island where both Peter and I live, they are not gold buyers. They would not have bought gold if they had not bought Bitcoin. They would have bought, as Peter said, meme stocks or the NASDAQ or, micro strategies or something else, but they would not have been gold buyers. And similarly, most of the typical gold buyers, if they didn't buy gold, they would not have bought Bitcoin instead. So I think until recently, and Peter's right about the ETFs, it's been very, very much at the margin, the amount of gold buying that hasn't happened because of Bitcoin. But I'm an optimist. Well, I'm not an optimist by nature, actually. I'm a glass half full kind of person. But if we look at Bitcoin, I think it's a great positive. When Bitcoin eventually collapses, as it will, because I think it's just a tulip bubble mania, when it collapses, where are those people going to put their money? I think some of that's going to flow to gold.
2024 has been an exceptional year for gold, and as we look ahead to 2025, analysts remain optimistic about the metal's prospects. The December 2025 COMEX gold futures contract is currently trading at $2,775 per troy ounce, over $100 higher than the current spot price. Additionally, some Wall Street analysts forecast that gold could reach $3,000 per ounce at some point in the coming year. Since the establishment of the Federal Reserve, gold has climbed from $20 an ounce to nearly $2,800. If similar trends persist, Schiff speculates that gold could eventually exceed $360,000 an ounce, depending on the rate of currency debasement. Both Schiff and Day are confident that while the timeline and exact route to this monetary reset is uncertain, the destination, a world where gold reclaims its central role, is inevitable. According to them, while the exact trajectory of gold prices hinges on the purchasing power of fiat currencies like the US dollar, the long-term outlook for gold remains undeniably bullish.
Just two quick things. How high can gold go? An awful lot really depends on how low the purchasing power of fiat currencies goes. So that's, I just flip it around. If you tell me where the dollar's going to be in 5 years, I'll tell you where gold's going to be. But in my view, there's absolutely no question that gold is going higher. All of the reasons that different participants have been buying gold over the last 2 years are still in place. Just central banks, buying gold to diversify away from the dollar they need to diversify anyway, but in addition to that, because of weaponization of the dollar. That's not going away. In fact, under Trump, the weaponization of the dollar threatens to be even more aggressive than it has been in the past. We all know about carrot and stick, but I don't think countries like Russia, China, Brazil, Saudi Arabia are going to suddenly reverse their approach because Trump threatens them with high tariffs. On the contrary, it's going to make them want to get out of the dollar, and therefore into gold even more rapidly. So anyway, all of the reasons that people have been buying gold are still in place. So, I would just say that gold's going to go higher and it's going to go much higher. How high really depends on what the price of the dollar is. Is gold going to return? I think the idea of a pure gold standard is not feasible at the moment. I'm a great advocate of a gold standard, by the way, and there's so much nonsense talked about, economic conditions under the gold standard. You only have to look at what's happened since the Federal Reserve came in, with a massive bubble in the 20s and deflation and depression in the 30s, a world war to get us out of that, more inflation in the 70s. Bubbles and defaults. The Federal Reserve's record is hardly a good one. The amount of currency that's been created over the last, particularly 50 years, I think just means that we couldn't go back to a pure gold standard in the near term. But will gold play a role? Absolutely, no question.
Yeah.
No question.
Yeah. Yeah, in 1789, with the first Coinage Act, the Constitution ratified, gold was $20 an ounce. And when they created the Federal Reserve in 1913, it was still $20 an ounce. We had no inflation during that time period. In fact, we had falling prices for well over 100 years. We had the Industrial Revolution. We absorbed millions and millions of immigrants into this country under a gold standard. And, we built the strongest economy in the history of the world with a gold standard. So to say that the gold standard didn't work is pure nonsense. I mean, it's worked better than anything we've tried since. You say how high can gold go? I mean, there's no ceiling on gold because there's no floor on the dollar. Since we established the Federal Reserve, the price of gold has gone from $20 to $2,700, almost $2,800 was the high. If you just assume a similar move from here, that takes gold to over $360,000 an ounce. So how long will it take to get there? It just depends on how much quicker we debase the currency. But I think the rate of currency debasement has accelerated dramatically. When this millennia started in 2001, gold was still under 300. And here we are, 20 odd years into it, 23 years, 24 years into it. And, we're 2,700. So gold's rise, I think, is accelerating, and I think it's going to continue to accelerate. But ultimately, I do think that we return to a gold standard because that's the only standard that works. And I think that if the dollar fails, which ultimately it will, I don't see how you just replace it with another fiat currency. I mean, I can see how, you have some of these smaller countries and their fiat currencies collapse and they get wiped out and they dollarize or they peg a new currency to the dollar. Okay, because, we still have some, fiats that are working. But if the king of fiat, if the primary reserve currency collapses, we have runaway inflation, then what do? You tell people, well, just take the euro, it's better, take the yen. I mean, none of these currencies, are viable as, so the only thing that makes sense is real money. And so ultimately, that's where we're going to go. We're going to head back to that. I just don't know exactly the timetable or the path that we get there, but I'm pretty sure that's where we end up.
The evolving financial landscape of 2024 has been marked by remarkable performances from both gold and Bitcoin. While Bitcoin captured much of the public's attention by reaching unprecedented highs, gold has solidified its status as a reliable safe haven asset, buoyed by global economic uncertainty, geopolitical tensions, and central bank policies. Historical performance and current market conditions suggest gold is entering a phase of accelerated gains, with forecasts predicting significant price increases, potentially reaching $3,000 per ounce in 2025. Can gold reclaim its central role in the global financial system as fiat currencies face increasing pressure?